And at that point, I should have a better understanding or clearer understanding of where I want to live. So for that, when I speak to those clients, I welcome it, because you can look up anything. We can Google anything. We can get a lot of information, but your own experience, something someone else says, somebody else's review may not be how you feel about it. You may come and have a totally different experience. So with that being said, being here, being in a specific area and having your own experience is super, super important. So being able to come, we have programs that aren't offered everywhere. There are some companies that specifically cater to people who are looking to rent, and they are lease to own programs. And two of the major ones that we've partnered with, that's Home Partners of America as well as Divvy. And so for us as realtors, being affiliated with these companies is actually, it's major, because it gives us the opportunity to work with clients that just not be ready. They may qualify, but they may just not be ready to make a definitive decision to purchase a home in a specific location as of yet. So with that being said, what we do is we connect you directly with these entities, Divvy Home Partners. They have their own guidelines. We will provide those qualifications to you up front, and then a link. And basically what happens is we forward your information, we plug it in, the link comes directly to your email, you fill out your information, and then they follow up with you directly. So you're clear that with us as realtors, we don't have anything to do specifically with your financials. These companies or our lenders are the ones that receive that information and make the determination of where you stand with everything. So getting back into our lease to own partners, basically they will ask you to upload your pay stubs and all of the qualifying documentation needed, just as a lender would. Of course, there are credit score guidelines, minimum income guidelines, as well as assets that they're looking for, which then will give them the information that they need to make a determination on what to qualify for. So at that time, once you've submitted everything, they review everything just as a lender would, and then they come back to you and they will advise you on how much you literally qualify for. So at that point, we take over. So as a realtor, once I receive notification from Home Partners or Divvy that you've been approved, you've been notified as well via email. So then we connect again and we start looking at homes that fit the criteria. So at that point, you know what your budget is, you know what area you really want to be in. So now we just need to find Divvy or Home Partner approved homes that meet the criteria on both sides. Also, with EXP, our brokerage, we have partnered with ProMove, which is a company here, a local company here in Georgia, that specifically works with people that don't want single family homes, but are looking for apartments, even luxury apartments. So there are over 750 apartment communities that we've been affiliated with. So to the point that you don't really want to deal with a yard and yard work, but you still want to rent, we have these connections with these communities. So from that point, we get you connected with them, and the process is pretty much the same. If you find an apartment, we have those qualifications as well. We can get with you on that, go out, see the property. If you absolutely love it, then we move forward from there with having you submit your application, and that's it. So there are other options for you if you don't feel that you're quite ready, whether it be related to credit or income, or just I'm not comfortable because I don't really know the lay of the land and where I want to be right now. So I want some time to rent before I buy. We can help you with that as well.
Awesome. Thank you.
I love that. Yeah, because you really don't know exactly where you want to live. You really want to experience it for yourself sometimes.
Mm-hmm. It's true. And as realtors, I think the one thing, and especially being that we have relocated from other places, we rely heavily on people who are here. So one thing that we offer to our clients, Nikisha and I both, is we'll do virtual tours. If you tell us the type of areas that you're looking for, what are the major priorities for you, we can give you recommendations, but at the end of the day, you have to do your own research. So if you tell us that you want to be in Cobb County or Gwinnett County, and I say, well, why do you want to go to that area specifically? And what is your budget? And they all kind of align together, then I can start showing you homes there virtually, right? I can even do virtual tours for you there. But that's obviously after you meet with Youlonda, who's going to pre-qualify you. And the rent-to-own program, that's not something that is really common in other areas. This gives you an option to rent a home and decide if you want to purchase that home later. Home Partners and Divvies actually purchases the home for you, but you're not obligated to stay in that home. If you decide after 2 years that this is not the area you want to be in and you don't want to extend your lease and you don't want to go ahead with the purchase, you don't have to. And I think that that's actually really good for people who are just not sure. So that's a great options for you guys to have. Anybody who's looking at renting or owning, look into these companies, do your due diligence. Finance. So I'm going to go over to the most exciting part of our presentation. Financing your home, because this is something that is very daunting for us realtors, and we try to explain to the best of our abilities, and sometimes people think that we are lying, especially when I'm working with family and they're like, what do you mean my interest rate is going to be higher? Listen, talk to Youlonda, and she's going to explain this because this is what she does. So Youlonda, please give us your spiel on this part.
My spiel. Okay, I'll start with a lot of people, the first person that they do talk to is a realtor. And you might get a realtor who'll go ahead and jump in the game and start showing you stuff. But I always say the first person that you really should talk to is your lender, your loan officer. You need to call me. Why? Because I think right now in this market, the expectation of the location versus what it's going to cost for you to buy is really off. One thing I can say about this area is the home values continue to rise. Once you purchase your home, the big takeaway is that you are going to grow so much equity because home values are really, really up. So mortgage options. I always have a conversation with my buyers to find out, what is your big takeaway? Do you have money to close? Because if you don't, that's going to put you in a different situation than somebody who has $100,000 in the bank. Or, do you want the lowest possible interest rate? Do you want the lowest possible monthly payment? Because that's going to put you in a different category than the next person. And so you kind of have to have that conversation and kind of talk through what your end goal is going to be as far as mortgage options. There are conventional loans, there are FHA loans, VA loans, USDA loans, there are jumbo loans. Like, there are so many different options, but you have to talk to a lender so that they can put you in the right program. A lot of people are like, oh, I want a conventional loan because that's the best type of loan. Well, you might have that mentality, but then, you're somebody who doesn't have the best credit score. So, you may not qualify for a conventional loan. So you have to have that conversation to know which options are going to work best for you. And then factors that affect your mortgage eligibility. So you have to understand that there are a lot of factors that affect what programs or mortgage options are going to work for you. So the first thing that people have to know is that you do have to qualify with your credit score. And it's going to vary from lender to lender. Southeast Mortgage has such a great reputation that some of our qualifying credit scores are lower than others. So you may go on and somebody may say, well, I called and they said for down payment assistance, I need a 680 credit score. Well, for down payment assistance with us, you only need a 640, but you also have to have at least a 620 credit score to officially qualify for FHA. And I say officially qualify because you can qualify with lower scores, but it's harder to qualify. You got to have more money in the bank. And I mean, I can go down a whole rabbit hole, but I'm just going to skim the top. So for conventional, you need about a 680 credit score. For an FHA, just a traditional FHA loan, you need at least a 620. For VA, you need at least a 620. And for USDA, which is a 100% financing program, you need a 640. Then you also need to qualify based on your debt to income ratio. And I think that's the biggest thing. Some people have like great credit. I got a 690 credit score, but you got a lot of debt. And the underwriting software will not approve you if your monthly debts versus how much money you're bringing in, if that ratio is too high, we can't qualify you. It doesn't matter how good of a credit score you have too much debt. And so you have to take the time to pay down some debt. Now, if your credit score is a little bit lower, then you have to take the time to work on late payments and things like that. So it's just a lot of different factors that we have to go through in order to make sure that you are eligible. And when we go into interest rate and loan terms, those two things affect your monthly payment. So somebody who wants, a lower monthly payment, then we'll do what we can to try to get the lowest interest rate. And you can, put up some more money to have a lower interest rate. People with a lot of funds in the bank, they buy down their interest rate to get a lower monthly payment. We are in a market right now where a lot of sellers are giving funds to close. You can use that money to buy down your interest rate. I know right now everybody's talking about interest rates being so high. Interest rates are actually historically lower. Not lower, I would say normal. There have been times where interest rates were 10, 11%. So we hope that it doesn't ever get that high in, our buying time, but 7%, 6% is actually quite even. And I always advise people, you qualify right now, go ahead and buy, because the home values are continuing to go up and we don't know what interest rates are going to do. When interest rates do go down, because they go up and down. When they do go down, you refinance at the lower rate, but you have purchased your home at the lower price. So interest rates to me is like the last tier. If you can qualify based on your debt to income ratio and your credit score, my advice is to go ahead and purchase the home. And then we talk about the mortgage application process. So you fill out the application, your name, your identifying information. A big thing that people have to understand is that, one thing that the underwriters look for is your employment. You have to have stable employment history. Most of the programs require us to put in at least 2 years of employment history. If you have had gaps in your employment, the underwriters they're going to want an explanation as to why. Some people were enrolled in school or in the military, or COVID happened and we got let go from our job. They understand that you're human and stuff happens. So if you don't have 2 consistent years of employment, we just have to have that conversation to make sure that that's not going to be an issue later on down the line. We do collect pay stubs. We need at least the last 2 or 30 days. You need assets, you need funds to close. How much money do you have in the bank? Because you have to have money for your down payment and closing costs. And there are programs that can help with down payment, and you can get help from the seller when it comes to closing costs. But the more funds that you have to close, the more likely you are going to get an approval. And then documents that you need a driver's license so we can verify who you are, your W-2s and your tax returns. That's how we verify your income. We do pull your credit. It is a hard pull, and we are going to pull that so that we can, see what debts that you have monthly, so that we can accurately calculate your debt to income ratio. And some of the red flags, some things that, could have you not qualify, is if your FICO score is too low, if you have unstable income that you can't verify or explain, If you have too much debt, like I was talking about your debt to income